next thing is going to be we talked about orange on green, and just like, what is that? Because I missed that, didn't understand it, right? So the next part of it is the first orange in that statement. So I'm going to open up the volatility monitor too. So when we do say those words, orange on green, we are talking about this
Candle,
candle, and then
movement monitor, and then the green.
Yeah, on orange, this is the orange that it's on, and then on green is when we see the green volatility monitor showing up below it, which means that that's a support. It should, just statistically, it should serve, or could have a strong, potential to serve as a support for price action. And then what we do is we look back historically, and we can kind of see which time frames have a lot of red and green, where I would argue, anyone would argue, just based on logic, that volatility monitor is only so trustworthy, right? Like, you can't really depend on it. And then we also have maybe situations where, I'm just going to see what happens. Not so much. Let's go bigger. We also have other situations that are longer, and it doesn't seem like much, but if you're looking for like consistency, then this is kind of cool, because you could say, wow, well, this one overall, I didn't see it turn red for 101 days.
Wow.
Right? So like, if that's kind of like what people have to do. The data is great, but people have to kind of find like, which one is the one that I can kind of count on. Like, I can't count on any of them, but which one's the one that at least historically has shown me I can count on it to a much stronger degree than maybe the smaller ones, right? So I don't feel like I could count on the 2 hour very much, but looking at like price action and what it's done, over this period of time, I can see that this weekly is pretty much respected pretty well over, many, many weeks, 101 days there, probably like, 60 days or something here, right? And then many weeks here, as is the purpose of the weekly charts. But I also have to like not ignore the reality that's right in front of my face. And I have to say, okay, but Brayson, if you're going to do something, just note there were 2 weeks out of this 101 days. And this could have only been like an hour, that the price action was under it. It could have been 2 days. It could have been 1 hour. It could have been anything. But I do have to at least acknowledge that there were 2 weeks out of this 101 days that price action did go below the green line. It didn't stay there. Actually, what's amazing is the volatility cloud did its job, and it said, no, chances are that the candle body will close above this green line, just statistically. But because this is one of the more volatile assets in crypto, that probably makes Bitcoin look, a bit more docile. This one had two weeks where price action dipped below the line. And so what a person could do if they were wanting to set a stop loss or use this for any given reason is they could just say, you know what? Okay, the max deviation that I can kind of see from this particular weekly data, this weekly volatility cloud, is something like that. So maybe if I'm going to use it for a stop loss, maybe I set my stop loss a bit below and maybe this is for a spot position, like a true investment, somebody that wants to invest in this asset. And this could be AT&T. This happens to be a high risk crypto, but the same logic applies if it was AT&T or Microsoft or anything else. If we're just looking at this, we say these volatility clouds on this time frame are pretty solid. I like it. There are 2 places where, let's just pretend, AT&T actually dropped below, but it did ultimately actually hold true. It held the body of the cloud, or the body of the cloud held the body of the candle, respected the cloud, and it did technically deviate from the cloud about 7% on 2 weeks out of 101 days. I'm sorry, these aren't weekly candles. These are 3 days. So somewhere in those 3-day periods is what I should have been saying. there were moments of down pressure where it deviated from the cloud by 7%. And that's it, right? That's like some pretty good data that you can go into it with. And so I would say by that logic, entering at the cloud with a tight stop loss for a long is probably not a terrible idea. If I'm investing organically, it may not be bad because I'm willing to lose 7% of my investment. Maybe I'm even willing to lose 10, right? So I could literally set my stop loss something like this. And then I know it's a kind of a crazy crypto, so who knows how high it could go. But
Going
when we talk,
crazy there.
yeah, when we talk about just the asymmetry that's potential, I mean, this is just a random token. But when we talk about the asymmetry that's possible in the crypto space, and probably a number of places, but definitely crypto historically, it's really cool to be able to, it doesn't matter how much money it is, right? Like to put $1,000 in, risk $70 and walk away with $5,000 a short time later, knowing that you'd be okay if you lost $70. And then obviously the great thing about it is you can magnify that, right? You could take it to whatever degree you want. You could say, I want to do it with 5,000 because I'm willing to lose $500. And I know that that is going to be a 6x of my capital. So risking with what is that? With $5,000, I know that my risk on no leverage whatsoever, my risk is about $500, maybe plus some slippage. My $5,000 is here. In this case, in Binance, I don't have access to Binance, but you could do this with Coinbase or anything else, depending on the asset, right? In this particular just example, it worked out to where I could have risked $5,000 and not risk the whole thing. I'm only really risking about 500 because that's where my stop loss would be set. I have a strategic calculated entry that I happen to decide would be good, which would be this green volatility cloud, because that's where the expected volatility would go. And I was willing to take the risk of losing 500. And in this case, because crypto, has the propensity to do crazy things, it ended up going to an absolute maximum so far, asymmetry of 48 units of reward per unit of risk, which we could have not known ahead of time. I'll say that, we couldn't have known where it would go. But that's where it did go to. And that $500 real risk, we'll even call it $600, would be in an effort to 6x that capital. So if you take, and I say that because this is a 490% gain, which means plus 500% of the original position, right? Give or take. So that takes 5,000 to 30,000. And so again, that's just how this one happened to work. Even if it just went like, half as high, this is 5,000 to somewhere in the neighborhood of probably 16,000, right? Because it's itself plus two other $5,000 positions were gained here, and another 25% of another one. So it's literally about 16,500 ish. So this is like what I was going through with Markel, is that it could be used for no leverage spot ideas, people trading spot. And I didn't really look there. We'll have to see where that price action went, because another thing to consider. Yeah, so you see how if somebody would have done that, I was just going off of these two candles here, but the threat would be obviously the future. So I didn't even look at that while I was drawing that. But here's an example of price action that would have dipped against your position just a little bit. It would have probably been like under the line just that much. So you might be looking at the position. If you're really watching it, your 5,000 would be showing up as 4,900 at a certain point on that day. But if you set your psychology around, from the beginning, I'm willing to risk all $500. I don't want to think about it. I'm going to check back however much later. And this is not like a high leverage position. This is like no leverage. And I'm just either going to lose my 10% of my $5,000, or I'm going to see where this goes. Then it's kind of neat, because then, you literally get that $5,000 to $30,000 experience. but this is the kind of analysis you can use on regular. And so it's a little bit of an idea of what volatility cloud does. Sometimes they can signify a change in trend, right? A potential change in trend. So when this cloud changed to the red, it definitely could have been worse, right? It didn't turn out to be, but it could have been worse. And then I'm also going to show you like what the conditions conducive monitor maybe would look like in that time. We'll back test this a little bit to kind of show you what it does. So that's a little bit of what to expect, right? This would be a place where we'd have to have a little concern that it's a resistance, much like the pressure lines. Is the price going to be able to breach that 3-day volatility cloud line? I was talking to Markel quite a bit about setting alerts here. You could actually go in and instead of watching it, you could literally go over here and you could set an alert around the volatility cloud. So I'm going to erase this stuff to not confuse it, but you could literally go over here and you could say, I want to know when price action of this asset on this time frame, 3-day time frame, crosses not price, but when it crosses the volatility monitor. And I don't want to know when it just crosses it and doesn't close. I want to know when it crosses it and the candle actually closes there on, again, specifically the 3-day time frame, right? And so it's going to calculate it based on the time frame that you're on. So that's what I want to know. When does the 3-day price action cross and close above a red candle, right? Because then I have another, if I wasn't in a position at that time, maybe I got out of it, that would be another opportunity for me to examine the case for entering something bullish, like a long, or maybe buying the asset, just flat out buying it, no leverage. Just, I'm going to buy it today, 5% stop loss. If I wanted to really, really simplify it, I could do it just like that. And so again, you just type in whatever you want to type. Possible long, what is it? Volatility cloud burned green. 2-day, right? 2-day time or 3-day time frame, right? So I could just write a custom message to myself. So that's how useful that is. Most of the things that I have in here as far as algos have alerts on them that allow that. So if there's ever one you have a question about, you can just let me know and I can let you know if there's an alert for it. So that's that.